Welcome to the deep dive. We're digging into the latest crypto news, specifically the market moves from July 18th to 26th, 2025. Our goal, make sense of it all, especially if you're just getting curious about investing.
Exactly. Cut through the noise, find the core insights. We'll focus on why things moved, especially the big story around Ethereum this past week.
Okay, let's jump in. Bitcoin, well, it had quite a ride, climbed past 120K midweek.
Yeah. Touched near 123K even, before settling around, say, 116K to 118K.
And the main reason was good news from the US, right? New laws.
That's right. Crypto-friendly acts like Genius and Clarity, that really boosted institutional confidence. Big money felt safer.
So more cash flowed into Bitcoin ETFs, those exchange-traded funds.
Precisely. Big inflows there. Made it easier for large players to buy in.
Okay, Bitcoin's important, but Ethereum, wow, its performance in July was pretty eye-popping.
Absolutely. We saw prices climb significantly. Think like $2,400 up to over $3,600 in just a few weeks.
And then on July 24th, something really interesting happened.
Yeah. For the first time in a year, Ethereum's daily trading volume actually beat Bitcoin's. Huge investor interest shifting there.
Plus, money keeps flowing into Ethereum ETFs, right? Net inflows.
Continuous net inflows, more money coming in than going out, strong buying pressure.
So what's behind this Ethereum surge? It feels like more than just hype.
Good question. Our sources point to two key things working together. Real demand and investment demand.
Okay, let's break that down. What's real demand for something like Ethereum?
It ties back to how it's actually used. Remember that Genius Act clarifying rules for stablecoins?
Yeah, stablecoins, like digital dollars pegged to the US dollar.
Exactly. And guess what? Over half of all stablecoins run on the Ethereum network.
Oh, wow. So clearer rules mean more stablecoin use.
Which means more activity on Ethereum, more transactions.
And more transactions mean more fees.
Right. And those fees paid in ETH get burned, permanently removed from circulation. It creates scarcity. That's the real demand, boosting value through actual use.
Got it. So what about the second driver, investment demand? Sounds like big companies are stocking up.
You nailed it. There's sort of a corporate war chest situation developing. Companies like Sharplink Gaming, BitMine Immersion Tech, they're buying ETH aggressively.
Sharplink, weren't they reporting huge profits just from holding Ethereum?
Hundreds of millions in profit in just a month. They're aiming to hold 1 million ETH. It's a strategic bet.
Kind of like MicroStrategy did with Bitcoin, right? Buy and hold, boost the company value.
Exactly the playbook. Buy the asset, stock price goes up. Tom Lee at BitMine explicitly wants to be the MicroStrategy of Ethereum.
But why Ethereum specifically? Why not just more Bitcoin?
Two main reasons seem to pop up. One, some see Ethereum as still undervalued compared to Bitcoin. More room to grow, maybe?
Okay, the potential upside is bigger. Makes sense. What's number two?
This is crucial. Ethereum offers extra income streams. You can stake your ETH.
Staking, like earning interest for helping secure the network.
Yep, around 3% annual interest paid in more ETH. For a company holding thousands, that's real revenue.
Plus, they can use it in DeFi, right? Decentralized finance.
Exactly. Lending it out, providing liquidity, potential for even higher yields, maybe 8–14%. It's not just holding, it's earning from the asset. Bitcoin doesn't really offer that in the same way.
So it's a productive asset for a company.
Very much so. And the numbers show it. Since mid-May, funds and companies bought about 2.8 million ETH. Only 180,000 new ETH were issued. Demand is massively outpacing new supply.
That's a huge imbalance. It all sounds very positive, but, new investors should be careful, shouldn't they?
Absolutely critical. High growth often comes with high risk. Robert Kiyosaki warned about a potential bubble risk in Bitcoin, and that applies broadly. Prices could be inflated short term.
So practical advice for someone starting out.
Stick to the big players, generally. Bitcoin and Ethereum. They're more established. Be super cautious with smaller altcoins, especially meme coins.
And avoid FOMO, the fear of missing out.
Definitely. Don't just jump in because prices are soaring. That often leads to buying high and selling low. Do your research. Start small.
Great advice. So wrapping up, understanding the fundamentals utility, corporate strategy is key. It's not just random movements.
Precisely. This deep dive shows how new tech is changing corporate value. It makes you wonder, what other assets might see this kind of shift next? Something to think about.